G'day crew, welcome back. It's been a bit of a hiatus, a bit of a break. Arnie and myself have been partying since the D's won the grand final, so apologies for being away. But we're back. We've come down from Cloud9 and we're back recording episode. Which one, Arnie?
Oh, mate, you hit me with that cold. I don't even know. It's been a month since we've recorded. Let me go check the episode number while you guys do some quick intros.
We'd be around episode 24 would be my guess, or thereabouts.
25, episode 25.
There you go. Okay, episode 25. Talking all things money in the tank. Welcome back. Joel Seach, Principal Advisor, Harpel FG.
And Arnie, Tax Professional. And again, we've got our good friend
Tabone from Vegas.
Rolling it all the way from Vegas.
Yeah. From Vegas, mate. Sly comments all the way from Vegas.
Still
got the Wing Casino in the background just to rub it in for the boys.
Indeed, mate. It's got to open up the strip behind me. Hello.
You'll have to update us on how your week pans out at Vegas, mate.
I will
on
in the next session for sure.
And still haven't been let back in the country, mate.
No, I got kicked out again on the 8th of October flight. So now locked in for 28th of November with Qantas. So we should be
back to Chrissy. No quarantine either.
No quarantine now, not even home quarantine. Good. So it's all kind of worked out quite nicely.
Love it, mate. Love it. Well, let's kick off today, gents. So we've got a bunch of different things to chat about today. We'll try and do a power episode, short, sharp and sweet. Talk things, interest rate, property, some of the US big stocks in the US that have been happening, Tesla and Ford, which Arnold will chat about today. And then Brad can have a good chat about all things crypto and the latest in some of the movements there as well, because it has been a crazy month in Bitcoin as well. So
got a few questions about it again off the back of the last episode with you, Brad, about crypto. But also, Jolie, maybe before we jump into that main topic, do you want to hit us with what's been happening domestically, interest rates and real estate and whatnot? Because it's been hot, hasn't it?
I thought you were going to ask me first, mate.
Oh, Rifkin's. Rifkin's first. Yeah.
All right, let's have a look here. So this is Renee on Success. Okay, there you go. He's got a picture of him in his Baywatching debut. So I never even knew that he was on Baywatch. So,
was he actually on the show? Is that him on the show?
It seems like it, on the set of Baywatch.
Renee was a baller, man. What a baller.
Management consultants amaze me. They tell you how to get rich, but they fail to get rich. And you do not have to be ruthless to be successful, but you do to be a billionaire. That's interesting. So
you don't need to be.
I don't mean too many non-ruthless billionaires, right?
Yeah.
Do you reckon, like this is just like a little aside, do you reckon you need to be ruthless to be a politician or a successful politician?
Yes. I think you can go in not ruthless, but I think if you want to make it to any sort of power position, I think just inadvertently the product of the environment.
Yeah, I think in general, like talking billionaires or just talking people success, you have to have a bit of kind of water off a duck's back mentality. You've got to be a bit kind of thick-skinned to kind of be immune to anyone's feelings, thoughts, or concerns about you as a person. They tend to separate those things really well.
100%. But ruthless can kind of mean I guess premeditated. I'm going to try and make money. I think you can get wealthy by being still a good person, but you get like hard, thick skin. But
they just don't care.
I think billionaire,
they just don't care. Yeah, exactly. But Arnie, sorry, mate, you've shifted Rifkin off the front agenda there, mate. So
sorry, I forgot. How could I forget Rifkin? But I was keen to hear about rates and property in Australia, and you were going to touch on what's happening domestically because the property market just won't cool off, Jolie.
Yeah, no, it's kept on ticking along, and there's always signs of things slowing up, and I think it's APRA came in with some overarching adjustments to how they look at serviceability for interest rates. So for those that aren't aware, when buying a property and borrowing to buy a property, they have what's called an internal assessment or a buffer rating. So essentially, if the interest rate is X, they'll push it out by say 8 basis point movements above that amount that you're borrowing, just to factor in your stress test, I guess, to say your mortgage. So what I think it was the APRA came in and sort of suggested, well, let's do a larger adjustment to that and make it 2 extra basis points on top of. So they've sort of tried to push it out a bit more and stress test it a bit more again, and just make it probably a touch harder for a person to borrow. Let's say they might have been able to borrow X amount now. That's probably come off maybe 5% with that adjusting of the interest rate buffer.
Interesting.
So that's how they sort of try to do that. They it's a really hard one. You could probably have you could have multiple episodes on how different governments and different the RBA doesn't really want to get involved in APRA and how they've tried to adjust or change. You could talk negative gearing adjustments. You could talk interest rate adjustments. You could talk the buffer amounts they put in. All those different things, but it's a really fine line because the government doesn't want to see property or markets take a big hit in confidence during this period of time, but they also want to try to keep a lid on things as well and don't want to see an explosion. So, but markets are natural. Anytime you're trying to put intervention on things, it's always going to have, an alternate effect in certain areas. So they've got to be really careful about that as well. So,
oh man, it would be a disaster.
I wouldn't want to be managing economies at the moment through this current period.
Yeah.
Can you imagine
such like a?
Could you imagine, boys, what would happen if the Australian housing market, especially in Melbourne and Sydney, crashed or went through a significant decline? It would be bad.
It's depending on how the Feds or the different central banks actually handle, I guess, the tapering and the faucet kind of turning off a little bit. I mean, it could happen. I mean, it's going to be such a game. And I guess, Joel, you probably know that the RBA is kind of not buying into the bonds in April 2024 anymore. Do you reckon that's going to be a bit of a sign that rates are coming earlier than 2024 now? Or?
Well, I think, I was sort of reading about it the other day, and that was probably what I was going to touch on is we got Cup Day tomorrow, which for Melburnians, public holiday for a sports event, which is just awesome. We've got 2 sports event public holidays.
I was about to say 2 right now.
Yeah. So, so I think, I think last year and November was when they sort of, was it the final rate cut, or they sort of spoke about what they're doing with tapering and whatnot. But they're not known to adjust too many things on Melbourne Cup Day. But there's talk of, do they change their rhetoric or tune around 2024 for being rate rises? And they, some of the pundits are now starting to think, well, do we start to see them at the end of, or somewhere through 2022 where they start adjusting it? Because maybe they weren't even, I guess, forecasting to see things recovering the way they've recovered. So obviously Melbourne and Sydney being locked down has probably hampered some things, but they don't want to see inflation. They don't want to see inflation get out of hand, which is when the cost of goods start to increase rapidly. Which, you're starting to see some inflation issues in America, and they're starting to actually sort of admit now there potentially is some inflation issues as well.
You can kind of concur to that. We hit 5.4% last month, and
and you don't want to see
construction and petrol and all sorts of stuff at the moment. It's crazy.
So they really want to keep an eye on that. So I think the RBA will definitely chat about it, and they might potentially adjust where they're forecasting to think that interest rates will go. They've already announced the tapering of their bond buying. So, it's going to be a super interesting few months ahead to see what occurs with the RBA in Australia, because they are very conservative and they do like to see things wash through. But in a time like this when things are moving so quickly, they're probably going to have to come out and maybe make a few adjustments or decisions around, because 2024 is a long time away, and you wouldn't want to see inflation running up. So they will. They'll have to adjust if they see inflation creeping up, but it may not be there yet for them. They may still want to see wage growth come back and all those things too. So
I think every country is a bit different, right? I mean, like you said before, you've got like New Zealand and Singapore, and they bring it forward, but you've got like the lockdowns in 2 major cities in Australia compared to, say, the US, where kind of lockdown stopped April last year. It's kind of, just because they're rate rising over here doesn't mean necessarily in Australia, right? I think they can take the conservative approach.
Yeah, that's it. So, and property's still ticking along, fairly well, and it's still, it's broadly across the board in all states. Some states are doing better than others, and some areas or regions are doing better than others, but more broadly as a growth asset, it's done probably one of the best periods of the property market in history, if not thereabouts, second best. So it's been a generational type of time from a property perspective this last period. And then obviously shares as well, similar things. Shares have rebounded so strongly and are past their highs now. So it's even October again was another strong month for both the American market and the Australian market. So it's there's going to be some
asset classes seem to be doing pretty well.
Yeah, growth asset classes, apart from being stuck in cash and on the sidelines too much. But so that's more broadly, I guess, wait and see, and I guess touching on those areas there for a quick snippet to give everyone a bit of an update on how things are going. Keep an eye on auction rates and see what those clearance rates are like. They're still in the 80s and 90s for the past period in Melbourne anyway, but that'll be a sign to see if things start to get a bit of a point where the supply picks up with lockdowns finishing and properties coming back on again. If the adjustments to the interest rates, talking about it, starts to make people a bit cautious. And then just broadly, I guess, things opening up again, people will have some that discretionary money that they might start spending on shopping or travel or those things. And maybe that cools the property market a touch. But it's one of those things that, the economists have been caught out so many times predicting a property correction. So you'd be very kind of out on a limb to try and correct a correction. But eventually it has to, subside a touch or slow down. But, some of the forecasts I've been seeing is still they think there's a bit to run, into 2022 as well from a growth perspective. So, it all measures up in terms of what's the serviceability, what's people's income. If people's income is going up, property costs continue going up. But if there's a ceiling there, and maybe there's not enough wage growth, or there's not that sort of thing helping it, then there's only going to be a point that property can go to. But the interesting thing is that we've done in Australia, the property market has done so well, even without migration. So you think about migration, there's been zero migration coming in, and the property market's still done what it's done. It sort of goes to show that it doesn't have to hinge on just people coming into the country. They might just be, people that are coming into rent for a period. But, you've done all that.
If it did cool off, right? Your average is over like a 3-year period. It would still be, even if it cools off 5-10%.
Yeah,
I mean,
exactly.
It's not going to be the end of the world.
Well, let's kick on to the next topic. So let's shift it to crypto for now, and then we'll go back to Arnie to talk a few direct stocks.
No. Before we go to crypto, I have one big announcement I need to make. So I'm okay to talk about the direct stocks after we talk to Brad, but I wanted to drop a bit of a bomb on you, Jolie, and say that during the taping of our last episode and this episode, I have made my first crypto purchase. Oh. and I spoke to Brad about it offline. And you can now call me the Sultan of SHIB, or the Sultan of shitcoin, because I own SHIB.
You can say SHIB at the moment, mate. Your return rate over the last 3 weeks has been pretty good.
Yeah, up there. It was getting up there, Jolie. I bought in at, I think I bought in at 0.000033 USD. Yep. And now I think it's trading
5 zeros.
4 zeros. And now I think it's trading at around like double that, maybe even more than double that. But it got to triple.
Double your money. There you go, Arnie, the Sultan of SHIB.
Shitcoin, my shitcoins versus your Bitcoin and Ethereum. It's a money in the tank race.
There you go.
I kind of probably go downstairs and just put it on like one of the thirds on roulette, and probably ROI. But anyway,
but we wanted to talk. That's why we got Brad on, and man, I reckon we should just have Brad as a permanent fixture, because crypto is such a huge thing in the finance world at the moment that I feel like there's just so many questions we want to ask you, Brad, and so many questions that have been coming in. I know you want to talk to us about some general updates in the crypto market, so maybe we'll go with that, and then I had some questions. Had some questions about SHIB, and then it will lead nicely into a Q&A later in the pod. But yeah,
don't look at me as a specialist of SHIB, my friend.
No, wait, I won't. I'm the SHIB specialist. If there's any SHIB questions, just please direct them to me. SHIB. Yeah, I know everything about SHIB now, but I might need your help on some of the more technical concepts. Like,
mate, you're a top 10 coin now.
Yeah, market cap. We've flipped Doge.
$36 billion market cap.
That's it. So like, it's just Bitcoin. You're next. Oh dear. So you were going to tell us about what's been going on with Bitcoin futures and what's happened in that space.
Yeah, I mean, how long has it been since we kind of caught up?
Probably about a month, mate. Because everyone can see Jolie's Premier's poster in the background there. I think the last pod we did with you was just prior to the grand final, which would have been the end of September. So yeah, it's been a little while.
I think back then we were actually talking about the Bitcoin, and that was kind of set up for. I think we talked about obviously there was the supply shock of kind of Bitcoin and ETH were up there. Long-term holders were holding longer. Liquidity in terms of leverage was lower than kind of previously, and it was kind of set up. And I think we've gone from around about mid-40s to mid-60s over that point of Bitcoin. Ethereum's gone from about 3,000 up to 4, a new all-time high a couple of days ago. And then, of course, your SHIB. I think I was reading the other day, $8,000 buy of SHIB last year equals $6 billion now this year.
Yeah.
So well done to whoever that was.
The wallet was inactive. Like, he bought it. It was inactive.
The wallet is inactive for 192 days. And so I'm guessing that person.
No, it's active.
Like many people did. Oh, is it active?
Let's say, like,
mate,
after all the Twitter hype, it didn't sell a single SHIB, but he made an NFT purchase after the fact, and people were looking at it on the blockchain.
So I only read it up a couple of days ago, and it was 192 days without any wallet action. Well, that guy is sitting, or girl, person, whoever it is sitting pretty on a nice $8,000 investment into $6 billion US. Hopefully starts liquidating. If they were to take some Joel's advice, I'm sure, and financial advice, they would start taking some of that off the table.
Unless they know something that we don't know about SHIB, and
unless they know something we don't know, of course.
To the moon. So
it's already gone to the moon for them.
Going to Jupiter.
But I mean, so it's been a good month. October, obviously, September, historically, the last 12 years, I think 9 years, been a horrible month. End up being a kind of semi-horrible month this year, but October came out of the gates, and it's been a very, very strong month. We had some Bitcoin ETFs approved by the SEC, so they're futures, so they're not spot price ETFs. But again, it just enables some people that inadvertently might not want to buy Bitcoin directly or other cryptocurrencies being able to kind of just go via the advisor and say, hey, get me into that ETF, because ETFs are the rage. These 2 ETFs, I think, or 3 on spot price that are on the approval board for the next month. One of them being kind of the Grayscale, which is kind of known for being a custodian and kind of an open share price, which is kind of linked to the price of Bitcoin. Do we know yet, Brad, like what drives the price change in the Bitcoin futures? Because, like, in a normal futures tradability, it'll be like the price and the volume. But with Bitcoin, is it? How do they calculate the volume changes in Bitcoin? Is it? How does that work? Yeah, I mean, they at the moment. So it's still. I mean, at the end of the day, it's just a bet on, because it's not buying at a spot price, right? So it's not like it's just picking it up in a dynamic. We'll try and trade fund, but it's basically just looking at outlook, and the risk or the fear was, because it's a smaller asset class compared to a lot of other asset classes. I mean, it's 2.7 trillion, but in terms of other, like, let's just say equities, people were scared that you'd have a lot of people on the sideline with money that could kind of use the futures as a manipulation tool to kind of scare people off the current spot price. It hasn't really played into that. I mean, there's only been about 2 billion or 3 billion worth of. I mean, it was the largest ETF ever to launch. Within, I think I had $1.7 billion USD on the first day of trading, kind of enter as inflows. But I think it's been about 3 approved, and there's about 3-4 billion worth of inflows. I don't think it's getting played that much at the moment, Arnie, and it is literally just based on the future price. And the spot price ETF hopefully will come through, because again, that will just bring through more money or open up more inflows. I think one of the biggest stories was actually the approval on interactive brokers, which is about 14,000 financial advisors in the US now have access to buy, I think, 5 or 6 different cryptos. And there's about $110 trillion worth of kind of FUM on interactive brokers. And, even if 10%, 20% put in 1% of their holdings into that, kind of as a diversification, talking about the ability of a lot of inflows. The month of October also saw, for those out there wondering what drives the prices, 90% of all kind of crypto inflows has come from institutions. So not from retail investors like us, like it did in 2017 and last year. The retail investors are kind of sitting by at the moment largely, and just kind of, they think that, like, they'll probably come back in around 100,000 if it gets up there. But that's what I mean. Crypto's going well. It's been a nice month. This has proven that there's a lengthening cycle. I think I may have talked about in the first show that it's kind of like 4-year cycles. And they predicted that as the cycles kind of mature and more people come into them, they'll probably lengthen. And so this has actually been the first cycle that's broken the traditional timelines around that 4 years. And so people are saying it's probably going to lengthen out till March, April next year before a bit of a blow off the top. But
I think on some of those points you made, just more broadly, it's starting to become, more of a mainstay in financial worlds and markets when you talk about ETFs coming online and some have come online. It's legitimising it. Financial advisors having it, being open to clients now, and clients probably being open to having a portion of their wealth in that area. So I can't see, it really going anywhere in the short term, and we'll see what comes of it in the medium to long term as well. But it seems like more things are going forward at the moment than against it, and I think as I've said for the past little while now, I think it's definitely going to be. I think the big players will be around for a while. It's going to be an option as a good alternative asset potentially as well moving into the future. And then you even start people. I think there was someone, a notable person the other day saying they like it as an inflation hedge over gold now, Bitcoin. I can't remember who said it, but yeah,
there's a few people out there that are big kind of billionaire hedge funds and the rest of it. Obviously, you still have Peter Schiff, which will say gold forever. But
when you think about it, it's like, well, if you base it on just the printing of money and the debt that the US has, Bitcoin is is separate to that. So
21 million coins ever, right? It's got a limit.
I think SHIB's got like a quadrillion, something like that.
Quadrillion. That's not 4 trillion, because there's a few people out there that think, okay, to get to $1, it only needs to get a quadrillion. Have a look up on it. It's a few more than that, people.
Isn't it 1,000 trillion? But yeah, while you lads were chatting, I was curious about how the Bitcoin futures were working. So I just did a bit of a quick Google search, and so just for clarification, so commodity futures are something that require delivery of underlying goods like oil, and those are settled with cash or they get rolled over. Equity. And
that's why you saw that go under $0, right?
That's right.
Go under zero. When they can go under zero because someone had to pick up the oil and they didn't have anywhere to put it.
and so market futures or equity futures track an index like the S&P 500, and they are calculated on the cash value multiplied. So it's 1 plus the interest rate over X days through a year period. And so that when they are trading those, it's all about the fair value and how it fluctuates versus the market price on the day, and how much versus how much cash premium there is. So, but with a Bitcoin future, it's based on the aggregate Bitcoin trading activity across major Bitcoin spot exchanges. So that's the underlying between Bitcoin and the spot market at the moment.
And that's why they're saying it's much different in terms of open manipulation, because if you're someone at the moment with a lot of money and you want to play it up or down, you're able to go onto the exchange, and you saw it happen over the last couple of weeks. You saw Bitcoin go from, you had, I think it was Coinbase, it went from 64,000 down to 8,000.
A flash crash.
Right? And there was another one just the other day. It went from 65 down to 57 and back up, right? And there's a couple of things there. One is manipulation of the futures market.
Yeah.
And another one is obviously the leverage positions that they can just wipe out. So, they wiped out $3.5 billion worth of longs and short positions.
It says here that the daily futures contracts for Bitcoin are settled on the volume weighted average price of the trades between the last minute of trading. So it's 2:59 p.m. to 3 p.m. Central Time. So, just in theory, if you play that out, Brad, someone loads up a massive position in whichever direction in the futures market, and then does a huge buy or a huge sell to either pump or dump it, then they can quickly execute the trade on their futures contract, and then they're going to have whatever the underlying asset is in between. So, yeah, I understand what you're saying. I wonder how they're going to police that.
Yeah, I think it's just going to be something that the asset class works out over time, right? I think with the grade of the actual, because it's obviously risks as well. So I think people are learning a lot more. So there's people that I know that are rather wealthy in the crypto space that used to play with leverage last year that don't touch leverage anymore. There's a massive pullback. There's a lot of those exchanges offering 100 times leverage before, and now the maximum they're offering is 5. And so I think it's like a a market thing that will just sort itself out. Where because you could open yourself up to 100 times leverage on that position and fire it down. So I think the greater the actual decentralization is. So it's not only looking at the top 5-10 exchanges and goes even further. I think it's just one of those things that will just sort itself out, like most of the other problems have, right?
Like you're chatting about before with property, and when you get intervention in there, it starts to shift things in different ways. It's the same thing with stocks. It's you got shorts and longs, and so people will smart people will end up working through the situations, and you'll have one person going one way, you'll have another person going the other way, and a free market will work that out.
And well, you had influx over the last 12 months. There's more investment bankers going into crypto trading desks than there is in traditional trading desks now, because they see it as like an arbitrage opportunity. It's so immature in its nature. Systems are still getting worked out. But I think that goes both ways. I think there's a few people that are getting caught out thinking that they're smarter than they are as well. And
yeah, for sure. Absolutely.
It goes the other way. But I think, also, Joel, you're talking about before around the ETFs and legitimization. I think, another huge side of that, and I've talked about the, more institutional buying than retail. There's now over 10 sovereign wealth funds around the world that hold Bitcoin.
You mentioned that before. You've got and sovereign wealth funds for the listeners, Brad. So
sorry. Joel, go.
Yeah.
I can say what it is if you want.
Yeah, go for it. Yeah. So
sovereign wealth funds is basically a fund set up for a country. Pick Norway, for instance, the largest in the world. Where basically they look at the royalties of their oil sales and they put that into a sovereign wealth fund, which is then invested into the future. Australia's got the Australian Future
Fund,
Future Fund, right?
Yeah,
and that's managed. And I think they say that the Norwegian sovereign wealth fund owns it's like 1.5% of every company around the world on equity markets, right?
Yep.
And so you've got those ones, and you've got the Saudi sovereign wealth fund, the rest of it. And so they're countries that basically diversify the money for future generations, for the use of future generations.
And you mentioned that they've started, there's 10 of them that have bought in now.
And there's just having a quick look over before, and there's now 41 companies on the Fortune 500 that have actually said that they've bought a Bitcoin for their balance sheets. So
incredible, isn't
Digital, you've got Square, you've got Twitter, you've got
Tesla,
Digital, you've got Tesla, you've got Riot, there's a whole bunch. And so it's pretty fascinating that the corporates are now looking at it as, okay, well, it's an asset class on the balance sheet. Obviously, I think that what comes with that also is going to be lower volatility in terms of the downside risk. So I think retail investors are much more apt to trade on emotion. And, last year you saw that, or the middle of this year you saw that in May and June, where the kind of price went from 65 down to about 28 of Bitcoin. I just think that the more kind of sovereign wealth funds and it's on the balance sheets and the rest of it, I think you'll see less volatility, but I think they'll also start playing into the corporate market, which we're seeing at kind of end of month options. We're seeing it like, end of quarter, end of year, hedge funds having to pay out distributions to people. So, that sort of stuff will start coming into the asset class, which is quite interesting.
It's an interesting segue into one of the questions I wanted to ask specifically about crypto, Brad, because I want to ask about SHIB. And I know you and I'll preface this conversation with saying that SHIB has been accused of being a meme coin only. But there's some...
It has more utility than Dogecoin.
Yeah, well, that's what I was going to say. There's a few...
It's got a DEX.
Yeah, well, there's a few things been floating around the internet, and there's this platform called Shibarium. And Jolie, just for your benefit and for the listeners' benefit who don't know about Shibarium, basically what they're trying to do is they're taking the SHIB coin and they're going to have a platform where you may be able to buy NFTs. They're going to have a payments currency platform. They're going to have a governance platform, and they're going to have another one. I'm not exactly sure what it is. But anyway, what it equates to is you've got these different... You've got the main SHIB token, you've got the leash token, which I believe is the NFT and onboarding token. And you've got the...
leash,
the Bone token, which is going to be the governance token. So if you own Bone tokens, you can vote on changes to what will happen to the SHIB platform. So, and then again...
That's the governance side of things.
And then you can take your SHIB tokens, Brad, and you can stake them, which will in theory remove them from the supply for however long you stake them for, and you'll earn rewards, right? So I sort of...
You've also got DEX, so you've got decentralized exchanges, you've got a smart contract layer as well. So...
What are those? Maybe we can talk through all
decentralized. DEX is a decentralized exchange which allows basically the transfer of your X currency to X currency. So it allows you to go from like SHIB to ETH. And it's basically a decentralized exchange. Just think about if you need to go from USD to AUD today, use an intermediary, whether it's a bank or you're using Wise or whatever your service is. And they're intermediary and they're the one that takes your money and kind of puts a bit of a buffer on top and passes it on for a fee. Whereas a decentralized exchange is exactly that. It just matches up. Brad wants to move ETH to SHIB. You want SHIB to ETH. Matches us up and it handles the transaction across the blockchain, right?
Cuts out the middleman.
Cuts out the middleman. There's no more. There's no more middleman. No middleman in a decentralized exchange, right? And that's why they can't shut down. So when China shut down mining last month.
Yeah.
You had a Chinese decentralized exchange in one day put through more volume in dollars than the whole of Coinbase, right?
Wow.
And this was an exchange that no one had ever heard of before, and suddenly they put through something like $17 billion in one day because they were trying to kind of obviously get the money and exchange it out for BTC to whatever out of the country. And so you can also, go back to fiat. So there's the decentralized exchanges are on SHIB, and you've got smart contracts on SHIB. And smart contracts are more of your kind of layer one solutions, which is like your ETH or Solana or Cardano, which allow kind of, smart contract functionality to be built. So there is an ecosystem being built around SHIB, which doesn't exist on Dogecoin.
Yeah, and at the moment it's built on the Ethereum network, but as I understand it, they're trying to move it off that and create their own SHIB network.
Correct. So at the moment, the gas fees, right? The NFTs, for instance, on the leash coins, there was people that I know that tried to get Leash to buy NFTs because it was a new kind of release last week or 2 weeks ago. They were getting it rejected, and then suddenly the ETH fees came through, the gas fees, and they had to pay $9,000 worth of ETH gas fees. So
it sounds like these gas fees are incredible, and I think you prefaced this in the prior conversation that when ETH 2.0 hits, the gas fees will be a thing of the past.
Reduced. Greatly.
Okay. So yeah, but I guess the question I wanted to ask you about it is, so it's sort of a two-part question, because I know a friend of mine holds SHIB and he is staking it on SHIB Swap, but he's doing it through Coinbase. So he's a Coinbase customer, but he earns the rewards through SHIB Swap.
Yeah, he wouldn't be earning SHIB rewards through Coinbase, I can guarantee that.
Yeah, so certainly Coinbase is a secure platform. I'm not certain how secure SHIB Swap would be. But some of the rewards he's getting are like astronomical. Like he's getting something like a 20,000 APY, which is average per year, or yield per year, whatever it is. On the Leash token, he's getting a 5% Ethereum reward,
annual percentage yield. But
and thanks, Brad. And he's getting like another percentage for SHIB. But then when I look at what I can do on Binance, I can get only like a 3% staking yield for my SHIB. So what's the difference between the platforms? Why is he getting so much more?
Well, so a couple of things here. I mean, staking, there's kind of a couple of different reasons why you stake to get interest earned, right? One of them is, let's say Cardano or ETH 2.0, where you stake your coins and you get a return based on those coins being locked up and kind of reducing the size of the overall processing that has to occur, and you get rewarded on that, right? And I always go by the saying, if it's too good to be true, there's usually another side to it, right? And so on Polkadot I earn 12%, on Cardano, I get 5%. On Cosmos, I get 6%. On some of them, I get 4%. So my range is a 3% up to 12%, which is still, inadvertently much more than interest-bearing accounts at banks these days. But obviously comes with a bit more risk. But I'd say a lot less than. There are obviously exchanges and also services out there that will do loans or provide leverage. And so they utilize your tokens and basically lend them out or short sell them or whatever it is.
Oh, I think we lost Brad.
There was even people offering thousands of % on like Polkadot and Solana and all these sort of things. And, it's a risk game. So if you see the 20,000, and you go 20,000%, how is that even possible? It also kind of depends on the staking pool. How much is in the staking pool, the price, how much is getting withdrawn out. There's a few kind of contributing factors. Now, the reason why that pool might be 20,000 is because of the absolute growth that's happened on SHIB over the period, right? And so you stake a coin at whatever, the coin's now worth this much. So to keep you in that pool and not just withdrawing it and selling it, they've got to provide a high APY. And so it's a risk game. If you can get that much and you're willing to risk the money, there is a possibility. But like the economics don't stack up for a long term for that, right? So it's not like it will keep staying at 20,000 or whatever. It can also drop in a heartbeat as well, what you're getting. So there's other ones like Polkadot and Bitcoin and ETH 2.0 and the rest of the world, ETH 2.0, you get 5%. It's pretty much locked in and guaranteed because of the organization and the amount of developers in the ecosystem and the maturity around it. Whereas SHIB's kind of gone from like a meme coin to trying to actually become an entire network in itself.
And get real utility.
With our chats about SHIB as well, Arnie, and your purchasing as the Sultan, always general in nature. No personal guidance or advice around any of these coins, but just talking generally in nature, as always on the podcast, guys.
No, not financial advice. I purchased it as a joke. I was sort of like, I need to do something for the pod, and then
he sent it to me, and I gave him a lot of earful, and then 3 weeks later, I'm going.
He's the Sultan now.
He's the Sultan.
Thanks for sharing with your other podcast hosts as well, Arnie. I could have thrown a little bit in the Binance account as well, mate.
Please join me. I'd love it if you get on board the shit coins. Like Brad's kicking himself right now because he's like, I've tried to teach these guys the right way to do it, and look at us, we're throwing money into shit coins.
I gave you a whole presentation, and these are 7 types of coins, and then there's an 8, but I don't talk about the 8.
The meme.
It's all for the pod. Do it for the people. All for fun.
Yeah, do it for the people, Arnie. But I mean, look, it is getting an ecosystem. There's a lot of groundswell for it. The only thing is, the token economics are horrible.
Yeah.
Better than Doge, because Doge is unlimited. So the token economics is basically looking at the amount of coins out there, its utility, what it can go to, what its current market cap is, all the rest of it. What constitutes kind of, what gets burnt, what doesn't get burnt. There's a few things there around. And the token economics of it was created as a meme coin. It wasn't. Yeah. But you've got things like now. If you're in America, I'll send a picture. I think I sent it to you. I was driving along the streets of LA, and an LA bus passed me, and I went, no way. And so if you Google, those listening, you Google Floki
coin, baby Floki.
Elon Musk's dog. If you look at that, they're actually now advertising on public transport in Europe and America they say there's a lot of scams out there, and so we want to kind of, level up and become more mature. And so they're utilizing basically whenever you buy into it, there's a 6% charge to buy into Floki. They're using the money there to put it out to the public to get more people to buy in, and that coin has no utility. So it's an interesting time. I think we're going to see a fundamental shift. Something's going to come out of all this.
It's a scam, man. There's so many scams. I say this with the full knowledge that I obviously bought SHIB with no real understanding of what it is, a pure gamble. But it's I feel like
I said, I could go to the casino and probably get a better ROI and risk.
Spin the big wheel, mate.
It's true, but I also feel like you're going to see in the future like some utility come into some of these coins, and there'll be some that are pure scams. And I wonder
99% of these meme coins, I was going to say some other word, but I think YouTube algorithm doesn't like that word. You're going to have 99% or 99.5% of all these, these 11,000 meme coins out there now, right?
Yeah.
They're all going to crash and go to zero.
Yeah.
I honestly believe that it's like a phenomenon that these communities of hundreds of thousands, if not millions of people are coming together because they've missed out on something. So there are a lot of people that are buying into this, are people that have kind of missed out on being able to buy a property or missed out on being able to actually get a bigger asset, and they see this as like a fundamental. They see it as a chance to actually make money.
Play
catch up, right? And there's so many people out there in that position that are buying in that. So a lot of people are going to lose money in kind of scams, but I think inadvertently 1 or 2 of these coins are going to get some utility, some use, and actually play out.
It's going to be SHIB, boys. It's going to be SHIB. You heard it here first.
Yeah.
No financial advice, general financial advice.
Yeah, general nature. And then
general nature.
The old adage is you don't want to you get caught holding the hot potato or whatnot. You sometimes the decisions you make or the best outcomes in financial life are the ones you don't make in terms of, not risking everything or not trying to sort of, hit the home run. There are a lot of kind of people out there trying to be home run hitters. There's going to be a lot that get struck out.
Yeah, it's funny
the
you
most
guys
successful people in the crypto, the most successful people that I know personally in the crypto space, again, general advice, no thing, are people that don't pick the top or the bottom. They're literally selling out mid-cycle, buying in mid-cycles. They just pretend like, they're buying in at long, so they're just DCAing each week.
Yeah.
Any coin that's under a risk tolerance level of like, say, 50. And then they're selling. So as the price goes up, they're kind of getting rid of bit by bit as well. The kind of, if the risk tolerance is over 50 and the price is going up, they're selling a little bit by little bit. And so they're the ones that actually overall, in my mind, are not making the $8,000 SHIB trade into $6 billion.
They're trying to hit first base, trying to get on base.
Yeah.
If I think about it, like what you said, boys, like missing out or missing the boat or whatever, like that would be a very common story in crypto too, because you think about like everyone would have heard about Bitcoin back in the day and never bought it. A lot of people would have heard about Ethereum. A lot of people would have heard about Dogecoin and thought this is an absolute joke. I know
Doge was the Doge was the precursor to SHIB that has created this.
It comes a lot with investments. Like you talk shares, shares to a lesser extent, like Tesla. You think about FOMO, and property. It's the same thing. Like it's that FOMO of missing out on this or missing out on Tesla, and why didn't I get on that, or why didn't I get on Alphabet back in the day, or Apple. All those things, I think, in terms of what you think about is that FOMO. It comes down to fear of missing out.
Yeah, I know.
I was on a Bucks party in Japan in 2019 when a mate, Neil Sarathia, who was in Hong Kong in finance, he said, Brad, I'm all in on Tesla, everything, sold everything and put everything. I was like, you're crazy. And then like all the boys are talking the other day from Singapore and everyone's just like, oh, Neil has done it. He's done it. So
that's like he has done very well for himself, because 2019, even if he bought it at the absolute top, he'd still would have 10 times his money, I think, from then.
More.
Yeah, more. I don't remember exactly what the price was, but it's a good segue because I did
let's talk some direct stocks with Arnie, some of the big stocks coming out of America. Thanks for the update as well, Brad, on the crypto space. It was good to get the conversation happening around it. So, and if
there's anything that I said wrong, or people have got any comments, or you want to add to the conversation, or you disagree with some opinions, feel free to
send them straight through to Brad. But and any questions in general, feel free to jump on and then ask any questions you might want to know about.
Yeah, we don't fact check, but if anyone wants to fact check us, please do, because we welcome
it. Please do.
Yeah. I wanted to just touch on briefly the results of Tesla and Ford, but also the big news that came out that Hertz was buying 100,000 Tesla vehicles. Did you hear about this, boys?
Yeah.
A couple weeks ago.
I mean, they're the first of the rank, right? You watch all the other rental companies now follow suit.
Yeah, it makes sense, right? Because I know like Tesla had a bonds quarter. They had, I'll just hit you with the highlights from the results. So they had operating cash flow, less capex of 1.3 billion in the quarter. They repaid net debt and finance lease repayments of 1.5 billion, and they had 164 million decrease in cash and cash equivalents. So they're still holding 16.1 billion in cash for the quarter. They had a $2 billion gap operating income, which is a 14.6% increase in their operating margin, and they had a $1.6 billion gap net income. And they had automotive gross margins of 30.5%, and it was 28.8% excluding the credit. So what's interesting about the gross margins in Tesla, automotive, I should say, is if you compare Tesla's automotive gross margins with Ford's automotive gross margins or General Motors automotive gross margins.
So the cost to make versus the outcome of sale.
Yeah, so revenue minus COGS, which is cost of goods sold. Ford, Tesla and GM all make around the same amount of money dollar-wise on automotive only, so excluding Ford and GM's financing arms. They all make around the same amount of gross profit, which is wild because...
It is wild.
It is wild.
Tesla's vertically integrated.
It is. It's very integrated and a lot more room to grow. Like if you think about like Ford is doing like over like $100 billion a year and in total revenue, And Tesla's not anywhere near that, and even in terms of deliveries, like those companies are doing a lot more deliveries over the year.
Yeah.
But the gross profit margins are the same for the automotive business.
It's interesting because you always think automotive works heavily on scale and time in as well. Like, Tesla's such a young company.
Maybe that's it though, Joel, in that scale is a huge lever of that, right? Which Tesla isn't at yet.
No.
But Tesla is a lot more vertically integrated than the others. So if they're running at the same, then obviously Tesla's got a lot more to go.
More upside, younger company. Yeah.
I think, without we can't point a finger to exactly one thing, but you've hit the nail on the head. Like Tesla has been vertically integrated since day one. And that means that they are saving money in areas where traditional automakers have to give up margins. Yeah, but you give it up for a reason though. So, for example, Ford or GM will have service centers, and they lose margin in those areas, but they may improve the customer's experience, and there's a place for them to go when there's an issue with their car. With Tesla, it might be a bit harder, or advertising or PR. But I know that I think a lot of the American manufacturers, in particular Ford, is now talking about trying to make their own business vertically integrated when it comes to their battery electric vehicles. And they've talked recently in their own results about a plant they're going to be building in the US. I forget what state it's going to be in, but it's going to be huge. It's going to be
Arizona one.
Yeah, it might be Arizona. And I think it's right next door to Redwood Materials, which is a company that's going to use, like, an ex-Tesla employee is the CEO and head of that. I think he's friends with Elon Musk. And they're going to be doing all the battery recycling for Ford. So it's pretty crazy results for Tesla. And they still managed to decrease the year-over-year average selling price of their cars. And that's not because the price of the cars came down. In fact, price of the cars have been going up because of inflation. But the fact that they're getting cheaper models in the mix and they're selling more of the Model 3 and Model Y has brought the average selling price down over time. And it will continue to do so. But with Ford, also had amazing third quarter results comparatively. I mean, these two companies are at different stages of their life cycle. Like Ford is a very mature company, been around for a long time. But I feel like the fact that Tesla is pushing these auto manufacturers in this direction is going to be a boon for the whole industry. Like, some people have been saying for the last year that these old ICE manufacturers, so internal combustion engine manufacturers, will go bankrupt. They're going to go out of business. But I think the opposite. I think a rising tide lifts all boats. And I think if they can successfully transition from their ICE business to battery electric vehicles or hybrids or whatever it is, maybe they'll have some hydrogen cars.
Look at Porsche.
Well. Yeah, Porsche.
Porsche new it's outselling. It's actually outselling their ICE engines. You've got VW that's investing $80 billion into electronic infrastructure over the next 4 years. $80 billion. I think, Ford obviously has taken over the utility truck market with the F-150 Lightning. Kills it.
Well, they spoke about that in their results. They've got something like over 100,000 orders for that Lightning when it comes in. So they've got no problem with their image. They've got no problem with demand. They just need to execute well. Listen to these third quarter financial results for Ford. So this is just the quarter one. So revenue down 1.8 billion to 35.7 billion in the quarter. Adjusted EBIT was 3 billion, down 0.7 billion. Adjusted EBIT margin, 8.4%, down 1.3%. Adjusted free cash flow was 7.7 billion, which was up 1.2 billion. And adjusted earnings per share was 51 cents, down 0.14. But year to date, they are at 98.7 billion revenue, up 7.5 billion. Adjusted EBIT 8.9, which is up 7.8 billion. Their EBIT margin is 9%, up 7.8%. Their adjusted free cash flow year to date, 2.2 billion, up 2.6 billion. And their adjusted earnings per share is $1.52, up $1.45. So this is a huge turnaround story, because Ford a year ago had a quarter where they were losing money on every single car they sold. They had a loss that quarter, and people were saying this is the death of Ford. They're saddled with debt, and this is a huge turnaround in my book. And they're just the CEO, Jim Farley. I think he deserves some credit. He's ruthless. Billionaires, cutting back to the start of the conversation, are ruthless. And he's cutting costs everywhere, and they're investing in the right things. And it's just, I think it's like, as a Ford shareholder, not financial advice, general nature, but I'm happy to see it.
Yeah,
so,
there's going to be so much more to play in this story, I think, overall in the car manufacturing space. Things like and we've spoken about it before on the pod, what's Tesla going to end up being in the future? Is it going to be a supplier of their infrastructure and their IP? Is it still going to make cars in the future? Where
they're looking into buying up resources as well, right?
Yeah, I think diversifying to different areas like space travel. Ford and General Motors, and you talk about vertical integration. They're going to start to try to really ramp up their electric vehicles and also the service of those and the headquarters of that area, and make that an integrated new version of Ford that they've learned from mistakes of maybe what they've made in the past to sort of keep up with your trailblazers like Tesla. And then the other thing which we're lacking in Australia domestically is the ease of infrastructure around charging your vehicle, charging stations, tax incentives, all those things. We're lagging a lot behind that. So how that bodes for the consumer of the future to say, well, I feel comfortable and I know that if I get a car, an electric car, wherever it may be from, where I'm going to get the best deal, it's going to be serviced well, it's going to be serviced on time and affordable. I'm going to be able to charge. I'm not going to run out of battery power when I'm on the road. I'm going to get good tax breaks. All those things are going to play into this space. And I think it's a super fascinating 10 years ahead. It's going to probably be the most fascinating.
The next decade is going to be fascinating. Yeah, 100%. It's really going to set up what the next, I think, your transportation for the next 50, 60 years. I mean, outwards decades. I mean, I'd say hundreds, but these days everything's changing so fast. Yeah. I think it's honestly going to set up what we're probably doing.
Yep.
All the way through.
There's been nothing like this change. I'd think since the invention of the car, in terms of such a significant change as to, what's happening now. I can't think of anything else that's been that significant since the creation of
railroads.
The first car. Yeah,
railroads is the other big one, and then air freight. But I also wonder about what this means for those industries, because for them to stay relevant, they're going to have to innovate. And I'm excited about what railroads are going to do. Can you imagine having like hover trains or something like that? Like, I don't know, man. It's getting a bit futuristic, but I think that's cool.
Hoverboards. All right. Well, that's been
on that though, Arnie. You've still got to remember that, like, say, China's got the largest high-speed rail network in the world. It's going to double again, but you can't put freight on it. Right.
You can't
so they've underinvested. They've underinvested in freight, and it's now costing them to actually transport coal by trucks.
Yeah. So whereas
America has it. No,
they
freight.
Can't put freight on high-speed rail networks.
Yeah, interesting.
No, too fragile.
I didn't know that. Okay.
So anyway.
So but some great facts, some really good topics today, I think, gents, and a good, I reckon 45-minute discussion or thereabouts of a raft of different areas. So
we better wrap it up, eh?
Yeah. But for any of the listeners out there, any questions you have in all those different areas, feel free to jump on. Where's the best place for them to write questions, Arnie, and get onto us?
Yeah, get us at Money in the Tank on Facebook, Instagram, Twitter, and YouTube. And we like the comments. You can hit us up anywhere, but if you could hit a like, subscribe, or drop a comment on the video, that helps us. And
and any questions, good comments, good, bad, or indifferent, love to hear from you. Love the community discussion, and we're here just to sort of help, I guess, understand the goings on in the market and help educate people, whether they're novice, intermediary, just to do better, be better, and do well in life from a financial perspective.
Yeah, we've got one Q&A, which is an old Q&A. Like Joey and I tried to answer this the other week, but it's actually probably better directed at you, Brad. So we're going to revisit the same Q&A, and it's from Michelle, and it's about crypto. And the question is crypto in any way like a mortgage-backed security? Will it burst, or could it burst like the GFC, the global financial crisis? And maybe just for your context, Brad, when I answered this question, I answered in regards to Evergrande, because Evergrande, there was rumors that there was Tether, commercial-backed paper tied to the Evergrande saga. And if something like that were to collapse, what that might do, and then the domino effect it might have. But yeah, do you have an answer?
The biggest bit, yeah, I mean, it's a good part of the answer though. So I'd say the reason why Gary Gensler, the SEC, is targeting stable coins at the moment, and why the SEC recently fined, say, Tether $170 million back on, I think, 2017, their actions then, is there needed to be a bit more regulation in terms of traditionally these stable coins, and what stable coins mean to everybody is that one of them largely equals one fiat currency. So one Tether equals one US dollar. There's no price real growth in them. And so basically what they say is for every Tether that we issue, we hold one US dollar in our as collateral. What became people became aware of in 2017 and 18 is that Tether, which is the largest stablecoin provider, started using collateral of USDC or other, and that's where they can start buying into debt, equity, other things. So, other instruments which add up supposedly. So every dollar we still have $1 worth of, but it wasn't a dollar coin. And so there's been a lot of, that's how you could see an unforeseen event, largely unforeseen event, because there was a few people at Michael Burry in 2007 that saw what was coming from mortgage-backed securities and the way that it can kind of run through everything. I think there's a risk always of anything new that isn't highly regulated or been around for a long time for inadvertent risks to come through. Right? Like the stablecoin risk. So if they held a lot of money in some risky Chinese property market stocks, and they were saying that's worth this much in US dollars because that's how much the US denominated bonds, debt bonds were worth. Yes, but it's very, very different in terms of mortgage-backed security, which is the packaging of many different types of loans rated on a weird average kind of way of averaging it. So you could kind of put some junk in there, throw in some kind of good ones and make it look good and sell it on at a low risk, bigger yield. So with crypto being more decentralized and the blockchain being public, I think the risk only really lays in kind of areas like a stablecoin or leveraged, previously leveraged, which has been kind of regulated a bit. APY, your returns, so I think very different. I don't think it's still a $2.7 trillion asset class. So if it for some reason did crash down, it could still have a rippling effect now that sovereign wealth funds and companies holding the bank balance sheets and the rest of it. But I don't think, your property market, I think is what, Joel, it's probably $100 trillion, $200 trillion thing. And then they securitize that and create more and more and more. And so, I wouldn't say it's the same.
That's what happened.
Probably not the same level of risk.
08 in the GFC for the listeners out there. There was a bunch of instos around the world that bought these bonds or these mortgage-backed securities where people were, getting these loans that they shouldn't have maybe had, and then they were parceling it up and making it appealing and selling it on to, whichever insto. And that's the reason it caused that ripple effect around the world when, these loans came due and people couldn't make their repayments or whatnot. They just had to leave the asset, leave the keys, and then the bank owned the liability. And that's the reason that got that caused a GFC event like we saw in 08, 09. And you hope, people learn from that and places learn from that. But, whenever you're dealing with something new or untried or untested, that it does cause issues and things come up. So, wait and see and watch this space, I reckon.
It's definitely a wait and see. And there was the reason why the SEC looked into Tether is because there was a couple of people that came out saying it was another company that they transfer money into to make sure they kind of hit certain balance sheet items of financials. And people were scared that Bitcoin has been bought on money that has been printed that doesn't have any collateral backed from it. And so it could cause Bitcoin, Ethereum, and the rest of it. Because at one stage, 70 to 80% of all inflows into cryptocurrencies was using Tether. And so if Tether was getting produced without having the collateral, then that's just creating money out of thin air and it could all come crumbling down. But, that's all gone through SEC investigations, the rest of it. But something like that can happen. So it'll just be different to a more
some would say also known as quantitative easing. Printing money out of thin air, printing money. So,
getting political, Joel.
Yeah, we'll see.
I don't know. With Joel on that one. I'm with Joel on a few other things.
That's a good. That's a really good answer, man. But I guess we come to our favourite segment: 50-50. What's your choice? Either or, this or that. Gun to your head, Brad. You're experiencing this now, and we've got a listener submitted one. But Joel, you've got one too. Is that right?
Yeah, mate. I've got one. Do you want me to do mine second?
Yeah, We'll start with ours. So actually, apologies to the listener. I have these written down, and I should have written your name down. I don't remember who sent this one in, but the 50-50 is.
To you.
Lads, when wearing formal attire, do you prefer a bow tie or a straight tie? Who wants to go first? Yeah, Brad, you go first.
After wearing ties every day for 10 years of banking, I'm going to definitely pick a bow tie. If I'm going to be going out formally, if I'm going to be putting on any sort of formal attire, which I hardly ever wear anymore after kind of wearing suits and cuffs and all the rest of it, I'll definitely go bow tie. Same difference.
Jolie?
I like a bow tie. I can't do one up, so they're all clip-on ones. They're all clippers. Can anyone do it?
Joel, learn.
Can you do a bow tie up?
My mate Lucas's wedding in Sydney. We all had to learn, and it looks so much better.
Yeah, well, I might invest.
Well, it doesn't actually look better. I got to say that, but it feels better because you did it.
Feels better. Yeah, you did it yourself. But yeah, I've just got a few clip-on ones, and they look good. I like them, Arnie.
You can also do the James Bond thing at the end of the night. You undo it.
Undo it, yeah. I like
shoulders.
that. Yeah.
You can't do that on the clip-on, right?
And similar to you, I wear ties so much for work. It's nice to be able to mix it up and throw a bow tie on, and especially if you've got a three-piece suit, I reckon a bow tie looks mint with a three-piece suit.
I'm with Jolie. I've never learned how to do one up. I've only ever had clip-on bow ties, and I do like a bow tie, but I feel like a bow tie is reserved for. No, it's not reserved for, but it means it's a bit of a nuance to your outfit, makes you look special. So sometimes, like at a wedding per se, I feel bad with the conscious choice of making, like, say, putting a bow tie on, because if
people look at you instead of the groom.
Yeah, if the groom's done that, I don't want that to be the case. So I rock a straight tie. But if I'm choosing, I guess I'm going to choose a
good
straight
man,
tie.
Arnie.
What a thoughtful guy, Arnie. What a
thoughtful guy. What a man.
What was yours, Jolie? What's your one?
It's Melbourne Cup themed. So because we've got the Melbourne Cup on in Melbourne this weekend. So for those listeners around the world, have a look at what the Melbourne Cup is. It's a big day, and I guess it bodes well with Tabone there being in Vegas when you're betting on the Melbourne Cup. And again, we don't, general in nature, don't condone betting or whatnot. But if anyone's having a bet, do you bet on a win, place, or each way? Just generally, if you're not sort of
for me, I'm a horrible horse or dog better.
Yep.
So I'm horrible. So I'm a place kind of guy.
Place, okay, yeah.
Because if I can just get in the top three,
happy.
I don't often bet on just winning places. I love to put trifectas on or the quaddy or something like that.
But part of my question.
If I'm being forced to choose win or place, I probably would go on the nose because I want to maximize returns. I'm like, let's just put it on the win.
I'm an each way kind of guy.
More successful than me, obviously, betting.
Talking diversified, I'm an each way kind of guy. But yeah, I didn't actually throw the old trifectas or box bloody Quinella.
Quadrillas.
See, my experience with Brad Tabone is he's one of the luckiest people on earth. So to him to say he's a bad bettor, I don't agree with that. I feel like if you get Brad involved in a trifecta, you're basically guaranteed to win.
Luck comes in other parts of my life, Brad.
Maybe it's dogs. A sign tonight, Brad, that you go downstairs.
Oh, no, gambling. No, definitely. Blackjack and poker, luck comes in handy. General advice, don't go do those things.
We look forward to hearing how you've gone in your week in Vegas.
Well, Brad, I'm one of those people that says whether I lose or I win. So
look forward to hearing.
You'll see.
Look forward. Well, great to catch up, guys. And it's been awesome.
Good chat, boys. Thanks very much.
Yeah.
Take care. Have a great Melbourne Cup weekend, everyone, and Victorians anyway. And, reach out to us. Any questions, yell out, and we'll endeavour to get back on here sooner rather than later this next episode.
Cheers.
Cheers, crew.